In this video, I'm revealing the SPY dip surfer strategy, a systematic approach with very simple rules that trades the SPY, the Spider S&P 500 ETF that's delivered a similar return to the SPY with less than half the maximum drawdown over the past 21 years. Stay tuned because I'm sharing the exact entry and exit rules with zero guesswork. This strategy trades on a daily time frame and only takes long positions. The idea is to buy short-term dips during an established uptrend. I've put together a comprehensive strategy guide you can download completely free. The link is in the description below. Before we look at the rules, let's check out the backtest results. We tested this strategy from January 2nd, 2004 to January 31st, 2025, over 21 years of data. Here are the key stats. We have a total return of 7x over this time period, which equates to a 10.4% annualized rate of return, a 13.8% rate of return over the last 5 years, a Sharpe ratio of 0.96, which is relatively high, a maximum drawdown of 20%, which is very low versus the rate of return, a MAR ratio, which is the maximum drawdown divided by the rate of return of 0.52, an average exposure of 38.3%, an exposure adjusted return of 27.2%. This strategy has taken 421 trades, or roughly 20 trades per year. We have an expectancy of 0.51%, which is the average return per trade, a profit factor of 2.68, a high win rate of 77.7%, an average win of 1.1% versus an average loss of 1.5%, and an average win length of 4 days versus an average loss length of 9 days. This is the equity curve of the strategy. You notice a generally steady upward slope, indicating consistent performance over the long term, though it experienced drawdowns during market stress periods like the 2008 global financial crisis and volatility during the market downturn in 2022. This table presents yearly and monthly percentage returns, along with total annual returns and annual maximum drawdowns. Here are the key takeaways. This strategy had the highest annual return in 2009 of 34.1% and the worst annual return in 2018 of minus 4.3%. 19 out of the 21 completed years had positive returns. We experienced the maximum drawdown of 20% in 2008. Let's dive into the entry rule. We enter when the current price is above the 20-day moving average, indicating an uptrend, and the current price is at or below the lowest closing price of the past 3 days, which indicates a short-term dip. We exit the trade when the current price is at or above the highest closing price of the past 6 days. Note that this strategy does not have a time stop or a stop loss. For a realistic backtest, we included transaction costs of a commission of the higher of $1 or 0.5 cents per share, which is the default interactive broker's commission. For all our strategies, we also include a slippage of 1 tick for stop orders, but as this strategy does not have any stop orders, it is not applicable in this case. Now let's take a look at what some of the entries and exits look like. You can see how the strategy aims to enter during dips in an uptrend and exit when short-term strength appears according to its rules. In this profitable example, when the entry conditions are met, that is, the price is above the 20-day moving average and at or below the 3-day low close, we enter long. The price moves up and the exit rule is triggered, resulting in a gain of 2.03%. This loss example shows a trade where after entry, the market didn't achieve a new 60-day high before consolidating or pulling back further. The exit rule was eventually triggered for a 1.07% loss. So what's next? We're moving into forward testing, tracking live market performance to see how this strategy holds up. We'll be updating the performance of this strategy on a monthly basis. If you want to follow along, make sure to subscribe. While a 10.4% annual return might seem similar to buying and holding the SPY over this period, remember that we experience significantly lower drawdowns. This strategy is designed as a building block in our Holy Grail strategy, where when combined with other low correlation strategies, We'll be targeting double the annual returns of the S&P 500 with less than half of the maximum drawdown, which will give you a smoother equity curve that lets you sleep well at night. If you found this video valuable and want to follow along, do these three things. Download the complete strategy guide using the link in the description below. Subscribe and hit the notification bell to catch our new strategy reviews and monthly performance updates. And share your thoughts in the comments below. I personally read and respond to everyone. For those who want to go deeper, I'm sharing more strategies through my newsletter at grailwealth.com, and you can connect with me directly on X at grailwealth. See you in the next video where we'll review our Holy Grail portfolio. Until then, happy trading.